all kind of suggest that the Fed may be cutting in September. So we saw stocks up big on Friday, yields were down big on Friday, gold was up big on Friday, and all of this really on the back of the, Fed Chair Powell's comments there. Afternoon, we have some headline things to cover here this week for sure, with the Fed at Jackson Hole last Friday and Nvidia earnings just from yesterday. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal here is to leave you feeling more empowered after every interaction. And we set up these weekly sessions every Thursday to hopefully share with you some of the news, the data trends we're watching, and weed out a bit of the noise along the way. And again, this week is pretty headline packed. So the first thing that I want to cover is the Fed had shared some comments at Jackson Hole on Friday. So this is going back to last week, but very important in how it shaped the markets and what things may look like here moving ahead. The few things that I want to highlight from what the Fed Chair Powell had shared was basically this idea that policy is restrictive, and basically sharing that this may suggest a change in policy stance. Restrictive meaning that basically rates are too high, maybe is a good way to simplify this, right? So basically the Fed is suggesting, or Fed Chair Powell anyways, is suggesting that policy may actually be restrictive at the moment, and this may require a change in policy stance. He did share that they feel the downside risks to employment are rising, and the risk to inflation upside is decreasing. He said that inflation and inflation expectations remain well anchored, I believe was some of the comments that came from Powell there on Friday. So basically, the simple version of this is it all kind of suggests that the Fed may be cutting in September. So we saw stocks up big on Friday, yields were down big on Friday, gold was up big on Friday, and all of this really on the back of the, Fed Chair Powell's comments there. It does seem more likely than not that the Fed will be cutting in September. I would say not a sure thing, but I do want to share that and kind of reverse from what I had heard in the last Fed press conference. I was trying to read between the lines a little bit, but it does look like, I think that at that time there may be an exploration of reasons to not cut. And I think based on these comments last Friday, it's more than likely that we could see the Fed cut here in the next session. And market is certainly anticipating it here at this point as well. Now, he could be foreshadowing future cuts, but it would seem more likely than not at this point, and the market is kind of betting that it's more likely than not that they do cut. On top of that, we have consumer confidence came out on Tuesday. The number was 97.4, so slightly above expectations, but a slight downtick from the prior reading as well. And then first GDP revision came out today, or yesterday, excuse me, I believe, Wednesday, and it was slightly higher at 3.3% now. All right, so I'm also going to cover the other big headline story, which is Nvidia stock earnings. But before I do, just a quick glimpse at what's coming up. So tomorrow we get income, spending, and inflation all ahead of the holiday weekend. So a lot of data tomorrow that will unpack next Thursday. Keep in mind, markets are closed on Monday for the holiday, and then we kick off jobs week. So right back into things. So be sure to tune in next Thursday. We'll cover all of that and more. But before we break for the week, a great question of the week, which is one of the big stories, of course, in the markets, is Nvidia stock earnings, which came out yesterday after the market closed. And there's a few reasons that this is so important. One is, just obviously the story behind Nvidia and their growth in general, but also how big this company has become and how much weight it has on the S&P 500, or the index, let's call it, right? So basically, Nvidia stock earnings came out yesterday. I will share very, very high level of perspective on it, but they beat on the top line. So they beat on revenue or sales numbers, and they missed their expectations on the bottom line. So slightly below expectations on profit, basically, right? One thing that did come out of it is that there are expectations around slower growth ahead. So this is really important to watch. And, I would kind of share, like, this probably seems obvious, right? A company of that size, first off, to grow the way they have is very unlikely. In fact, it could, they're already, the largest, I believe, right now, or one of, depending on the day you look, companies in the world. So to continue the growth they've seen in the past is not just unlikely, but probably not even a reality, right? So probably expected there, although I think that the markets in general kind of expect this story to continue, and so a miss in earnings, I think, is relevant for sure, and definitely something to watch. The other thing I wanted to mention is I was actually at an event here for our industry recently, and a speaker had brought up a really great point. And what they had highlighted was this idea of capital expenditures in tech companies, and basically how that's grown over the last couple of years. So the last 2 years, capital expenditures for tech companies has grown significantly, which may sound, maybe not that relevant on the surface, but what this person had shared is how the market is interpreting that. What they had shared is maybe the market is repricing tech companies, because if they have to continue to spend on capital expenditures in this way, the question is, like, how does that translate, right? If you think about, like, a car company was the example they gave, and they have to continue to buy, manufacturing and factories and things like that to build their cars, that gets factored into valuations. With tech companies, a lot of times these expenditures aren't really accounted for, and with the huge profit margins and all that, we think it's just going to continue. But what he had shared is a lot of analysts may now be looking at tech companies in a bit of a different light, where if they have to continue to spend to this level to keep up and be competitive, there is a lot of expenditures that will cut into future margins. So very interesting topic. This is maybe a little more in the weeds than the earnings conversation, but definitely something to weigh a little bit here as we look ahead, and especially given how big the Magnificent Seven stocks have really played a role in markets here lately. So just thought I would kind of share that. Again, I thought it was very interesting, and maybe too early to take that to heart entirely, but it is something to watch for sure. So I hope that's helpful. Everybody, I hope you have a great upcoming holiday weekend. Again, markets are closed on Monday, but be sure to tune in next Thursday. We'll cover the income, spending, and inflation from Friday, as well as the beginning of jobs week there next week. Have a great holiday weekend, and we'll see you next Thursday at 3.